Good evening, everyone. This is Financial Literacy 101. Today, I want to give you a quick video about PE ratios, price earning ratios. This is one of those indicators. This is one of those analysis tools that I was talking to you about that actually also encompasses the EPS, which is the earnings per share. So I'm going to use Investopedia as my source. I'm going to give credit out to Investopedia. It's why build a new wheel when they already have one out here. So let's break this down. So to calculate a company's PE ratio, we use the following formula. So essentially, the PE ratio is a breakdown of the price per share, meaning the share price, okay, the current share price. And I was looking at an actual stock, and this probably can help you guys out later on, is this particular stock right here. It's called CD. TX is the ticker, but it's CDR Therapeutics, okay? But anyway, let's get back on this PE ratio really quickly. And the two we're breaking down is Bank of America and JP Morgan Chase. Now, this equation is based upon Bank of America, and we'll get into why we're comparing it to JP Morgan Chase. Now, as the information state, as the end of 2017, Bank of America Corporation closed the year with the following. The stock price was $29.52. The EPS was $1.56, and then you divide the stock price by the EPS, which actually gives you the PE ratio. The PE ratio, the price earning ratio. What is this actually good for? This tells investor, is this particular stock overvalued or undervalued or on target? But how can they do this? Now, as it says here, in other words, Bank of America was trading roughly at 19 times earning. However, the 18.92 PE by itself is particularly helpless. It's useless, essentially, because it has nothing to compare it to. Now, here they compare it to the S&P 500, which is the average is around 15 earnings, which that actually depicts that Bank of America at 19 times earning at 18.92% is actually overvalued. So when we're dealing with the S&P 500, that's really not a good source to compare it to. So they break it down even further, say, you know what, we need to compare it to a company similar in that industry, which is JP Morgan and Chase. Now it says to compare Bank of America PE to a peer bank, we calculate the PE for JP Morgan and Chase at the end of 2017, so in the same year. The stock price is $106.94. EPS is $6.31, which we know the EPS, earnings per share, also is a good indicator of how much a company can pay out in dividends, and it also shows you if that company is profitable. Now, after the equation, okay, let's go back up here very quickly. After dividing the stock price by the EPS, we get the PE ratio, and for this particular one, for JP Morgan and Chase, is $17. So now we only see that when you compare Bank of America PE ratio against JP Morgan and Chase, we see 19 versus 17, so it's not that overvalued. They're right in the same realm. And as Investopedia says here, Bank of America stock does not appear overvalued as it did when compared with the average PE of 15 for the S&P 500. So it's always good when you're breaking down the PE ratio, because here's the thing, here's the bottom line. The reason why PE ratios are so important as another tool in your toolbox is when you're investing into a stock, short-term to long-term, you want to know if it's overvalued or undervalued, because chances are if it's overvalued, that stock will simply start to decline and you may lose a lot of money. But when stocks are undervalued, it's great to invest in those. Now, there's other indicators and tools that can also help you to make an educated decision, but this is one of those main ones that investors love to use. Like, this is an undervalued stock, and they compare it to other stocks in the same industry, okay, that may have the same business workup, the same business plan. So these are the things that you need to look at to make a well-advised decision in the organization and corporation that you're investing in. You want to invest in undervalued stocks because they're not at value. They're undervalued, meaning they have a lot of potential for growth, potential. Again, this is one indicator, this is one tool, this is one metadata that can help you to invest in a potential stock that may boom when you compare it to other corporations and stocks within that industry. So with all of that said, ladies and gentlemen, that is a quick breakdown of the PE ratio. And I hope this helped you to make well-educated decisions and future profits in your bank account to come. Learn money and be inspired. I'm out.